In the precarious dance of financial markets, a shadow looms, forewarning of a potential storm. BEC research contends that the stock market might face a heart-stopping plunge of more than 25% in the coming year, shackled by relentless interest rate hikes that could finally push the United States into the icy waters of a recession. Despite the current optimism as the year draws to a close, the specter of an impending recession casts a troubling pall over the immediate future of the stock market. The strategists at BEC paint a grim picture, cautioning that unless there's a significant easing of monetary policy, developed markets, including the US, are hurtling toward a recessionary abyss, spelling out an ominous risk-slash-reward equation for stock. But are we prepared for the economic tempest about to strike? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So, before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button, leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. The gathering storm, economic recession imminent. Higher rates, lower markets. The forecast is stark. The S&P 500 could plummet to 3,300, marking a staggering 27% nosedive from its current perch, representing the most perilous terrain for investors since the harrowing days of the 2008 financial crisis. This ominous drop, predicted by BC strategists, hinges on the inevitability of a recession anticipated to hit around mid-2024, unleashing financial havoc unless the Federal Reserve takes drastic action to ease monetary policy. Inflation's thorny dilemma. BC strategists argue that the Fed's hands are tied, entangled in the thorny dilemma of inflation. While the camp remains in the disinflationary zone, the expectation is that inflation won't decelerate swiftly enough for the Fed to intervene and stave off a surge in unemployment. The prospect of a rate cut before the summer of the next year seems dim unless a recession rears its head or inflation undergoes a sudden collapse. Signs of the economic squall? Cracks in the job market. The tremors are felt in the job market, where hiring seems to be taking a breather. See a strategist note a slowdown, with October witnessing a meager addition of 150,000 jobs compared to the previous month's robust 297,000. As lending conditions tighten under the influence of prolonged higher interest rates, whispers of an impending default cycle grow louder. Consumer exhaustion? Consumers, the lifeblood of any economy, seem to be fatigued after a summer of exuberant spending. Black Friday might have dazzled with record sales, but beneath the surface, households are depleting their pandemic-era savings. October marked the first decline in monthly retail sales in 7 months, hinting at a potential slowdown led by consumer fatigue. Hope amidst the gloom, a fragile optimism. Dreams of economic resurgence, yet a glimmer of hope persists in the investor realm. Despite the foreboding signs, the surge in stocks and the anticipated slashing of interest rates by the Fed have fueled optimism. Some financial giants, including Deutsche Bank, Bank of America, and RBC Capital Markets, even predict a dream scenario where the S&P 500 achieves a new record in 2024. Conclusion: a call to navigate the storm. As we navigate these uncertain financial waters, the question lingers: are we on the cusp of a financial tempest, or can the winds of optimism steer us to calmer shores? The delicate balance between economic forces and market sentiment beckons us to contemplate the path ahead. What is your take on this precarious financial forecast? Share your thoughts on whether the storm will pass, or if we are indeed standing on the brink of a significant economic downturn. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.